Good morning, everybody. Happy Friday. It's January 31st, 5:30 a.m. Central Time. Grain markets lower to sharply lower this morning. Corn markets getting beat up a little bit. Brian Split is here. Guys, let's start off with this tariff news that hit yesterday.
So President Trump says that he will impose 25% tariffs on Canadian and Mexican imports tomorrow. Trump cited the influx of fentanyl and other drugs, the surge in migrants, and trade deficits as reasons for imposing the tariffs. He said the levy of 25% would serve as a floor and might increase with time. Trump also said that he will impose tariffs on China, but did not specify the amount, though previously mentioned a 10% tariff. The president has also vowed to put tariffs on pharmaceuticals, semiconductor chips, steel, aluminum, and copper, which would affect numerous countries.
Late yesterday, the Wall Street Journal reported that this is not necessarily a done deal and that Trump's aides are searching for some sort of 11th hour deal that would avoid universal tariffs. Trump is still likely, this is from the Journal report, Trump is still likely to announce some sort of trade action Saturday, but it could affect only certain sectors, maybe just steel, maybe just aluminum, maybe they exempt things like crude oil. The administration could also announce tariffs, but with a grace period. So they could announce tariffs and then maybe say, hey, you've got a month to make a deal with us. Brian, the corn market gapped lower last night. Is it because of this news?
Yeah, I think so. I mean, I don't know if there was really any other major news besides this. Obviously, Mexico has been a major importer of U.S. corn. Canada imports quite a bit of U.S. Ethanol made from corn. And so we had closed near the lows yesterday. We had this news happen or come out after the close. So I was surprised that soybeans didn't get with it a little bit more right away in the session. But maybe, again, because this is pretty much a Mexico and Canada deal thus far, corn is going to be much more sensitive to that. We did also have mention of adding 10% tariffs to China at some point. So it's going to be really interesting to see, because we know last weekend we had the whole deal with Colombia, and then that kind of got sorted out rather quickly. The market opened lower Sunday night, traded a little lower Monday, and then came back. So we'll see if we have the same reaction here today during the day session.
We're going to get to Mexico in a second. The one thing to be aware of with China is that China's been the top buyer of U.S. soybeans this year. Of all of their purchases, however, we've already shipped 88% of them. We've got about 90 million bushels worth of Chinese soybeans sales that are not shipped out of the 740 million that they've bought in total. 90 million is still sizable, but it's not as big as the unshipped corn sales to Mexico. Mexico had some sort of response to this.
Yeah, they sure did. So the Mexican president stated earlier this week that she doesn't expect President Trump to go through with his tariffs, with his tariff threats. However, if he does, the nation is ready to implement retaliatory tariffs of up to 20%. The tariffs would likely target produce, cheese, pork products, and bourbon whiskey, as well as steel and aluminum. The products were chosen because they originate from areas that strongly supported Trump in the election. According to Mexico's economy minister, Trump's proposed 25% tariff on all Mexican imports would cost 400,000 American jobs and hurt U.S. economic growth.
So even though the comment about, targeting Trump's base was mentioned, grain, corn was not explicitly mentioned here, Brian.
No, and it's interesting that you mentioned pork. Mexico has been a very strong importer of pork as well. So it'll be interesting to see how the livestock market opens up. And I think cattle is going to be sensitive to this issue as well.
Okay, with regard to Mexico and corn, if they were to retaliate, and we have no reason to believe right now that they will, but Mexico has 312 million bushels of unshipped U.S. corn purchases on the books that could be at risk, I guess. Some people out there, Brian, have thought for a while that Mexico was kind of front running what would be their typical program to get in front of this tariff stuff. I don't know if that's the case or not.
Well, they had a drought last year too, so I think undoubtedly there was an element of needing the corn because their own domestic production suffered tremendously. I don't know the nuances of how these tariffs will be levied, and we talked about grace periods, and if you already have the product on the books, does it get tariffed, or how does it get tariffed? Is it shipped? These are all things that I don't know, and I don't know that the market knows. But this is I think just a pretty big kind of sentiment changer right now. We've been seeing the funds buy an awful lot of corn. The size of their length is very large. It does make it vulnerable to some profit taking, some long liquidation. I don't know. I mean, the charts have a lot of room to where the market could break just to get to some support. So I don't know if you're going to do any long-term damage from this single event, but we could certainly pull back, quite a bit.
To go back to those charts real quick, just your thoughts. I mean, there's enough that you could draw 7 different trend lines that kind of trend upward on this chart probably, and you could correct and still be in, quote, bull market or uptrend territory. You could do a lot more.
Right. The uptrends are all relative to certain time frames, and you have two time frames here. You could go all the way back to August lows and October lows. That's kind of your most shallow uptrend.
Yeah.
I think you're going to have tremendous support in the 460 area for March. That was basically where we were making highs prior to the January report. So if you kind of say, okay, we've made a high just under $5. That low that we had recently, that last pivot low was 477 3/4. I do think if you take that 477 3/4 low out, we're going to see additional technical selling. And, I think the measurement of that trading range extended down would likely lead us to 460, kind of a return to the scene of the crime, if you would.
All right, let's go to Brazil.
So Brazil's delayed corn planting could further constrain the already limited global corn supply. Rainfall in Mato Grosso, Brazil's top corn producing state, has slowed soybean harvest, which is also delaying corn planting. Only 1% of the crop was planted in the state as of last Friday, the slowest pace for the date since 2011. In 2011 and other years when planting was delayed, the state saw some of its lowest corn yields. Planting is expected to speed up this week since farmers usually plant about 11% of their crop in just this 1 week alone. Meanwhile, planting progress in Parana, Brazil's second largest corn producing state, was progressing well with 9% complete. The two states combined account for 2/3 of Brazil's second corn crop production.
This was a very good piece from Karen Braun at Reuters. She's excellent. Brian, I pulled a whole bunch of corn supply and demand charts that I want to run through because there's a number of different ways to look at this. So here's world corn ending stocks to use ratio, supposed to be the tightest since the 13-14 marketing year. So this isn't necessarily bearish. This is probably a friendly input, right?
Yeah, and I think this is likely the leading element of the fund length is more, based on world numbers.
Okay. The U.S. number has also tightened up a little bit. U.S. corn ending stocks to use ratio now projected at 10.2%, which, as I mentioned yesterday, I believe is closer to what we saw during the bull market years of like 21 and 22 rather than the bear market years of 15, 16. So this is also supportive.
Yeah, not quite 9, but definitely not the 12 that we were thinking we were at just a few months ago.
Okay, let's get a little deeper here. Brazil corn ending stocks to use ratio. First of all, Brazil historically is not big on ending stocks, but the ending stocks to use ratio this year projected is 2.1%, meaning that for every 100 bushels that they use, they're going to have 2 bushels left over at the end of the marketing year. Is this something to be concerned about?
It's the lowest number I see on that chart, Joe.
Okay. So is it fair or foul for us to use this, considering that they consistently run, I mean, not consistently, but very often run a stocks to use like 5%, which in the U.S. would be like, that's not even
right. I don't think we can compare their stocks to use to the U.S. stocks to use and put them on an equal playing field. But nonetheless, when you look at this history and you go all the way back, this goes back to 2000. This is the tightest stocks to use in Brazil that we've seen.
Okay.
Period. Right.
Okay, look at this one. People love to do this. Let's take world ending stocks to use, but let's take China out. And that's what I did with this chart. So if you do world corn ending stocks to use ratio, but you take China out, you're at 9.5%, which is the lowest. You got to go back to, I think, the 1990s or even further than that. Is this fair or foul? To look at it that here, let me preface that by showing you this. How do you do world corn ending stocks to use and then say, oh, we're just going to take out the second biggest producer and we're going to take out the 4th biggest importer? I mean, does that make any sense?
I've always been, this is probably the one that I would least likely lean on because China's stocks are relevant. What they have and don't have is relevant to what they're going to buy or not buy.
Well, people think they're fake. The numbers are not real.
That's a whole other conversation, Joe.
I
mean, sometimes you kind of just have to go with what you have, right? And use a number. But I think those are two different conversations, being, the numbers being fake and then ignoring the numbers altogether, right?
Okay, but so we go back through all of these charts. Is there anything here that looks really like bearish or burdensome to you?
No, the world stocks to use have definitely been tighter, but we're tighter than we've been in about a decade. U.S. corn ending stocks to use they've been tighter, but they're relatively tight.
Yep.
We're not, we're not $7-8 stocks to use tight, but
No.
we're definitely, $5.50, possibly $6 tight, depending on how the export numbers change over the next couple of months, I think.
These are all friendly, but then if you went and pulled the global soybean charts that would be
Different
similar to
story.
this,
Yeah.
it's a totally different and kind of bearish looking story.
Alrighty, so U.S. corn export sales were strong last week. Net corn sales were reported at 53 million bushels. The print was down 18% compared to the previous week, but up 39% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales fell below pre-report expectations at 16 million bushels. The print was down 71% from the previous week and 33% from the prior 4-week average. China was the largest soybean buyer for the week. Net wheat sales were near the upper end of expectations at 17 million bushels. The print was up noticeably from the previous week and up 96% from the prior 4-week average. The Philippines were the largest wheat buyer for the week.
As I understand it, Brian, U.S. corn will be competitively priced on the export market for months to come. That second Brazilian crop is the big export crop, and it doesn't come online until March, April, May. I mean, it's a long harvest. It's drawn out, but I think this could continue in corn.
Yeah, I mean, this week's export sales were very solid, and I think if you're looking at pace analysis, you would say, how did the USDA just lower export demand on the last report? And I think that was just mainly a function of offsetting some of the production loss because of the yield reduction. So there's going to be those out there that will continue to say, hey, the USDA needs to take that export number and move it back up, and that may be possibly the case. This puts a tremendous amount of pressure on the Brazilian safrinha crop to perform, because if there are weather issues, and we kind of started with talking about possible planting delays, and all that really does is it puts the pollination of that crop a little bit further down to where they're more likely to have warm and dry conditions, kind of past the rain event. And so if we do see more of a delayed planting, I think that's going to keep the conversation going pretty strongly, because if that crop does underperform, the world's going to be relying on U.S. corn for export a little bit deeper into our marketing year.
When it comes to soybeans, as far as the current marketing year is concerned, our best days of export sales are behind us. Certainly, it's not too long from now, like usually April, May. That's when China and some other global buyers will start to come in and buy new crop beans. But we're kind of where we need to be to hit targets. Wheat sales, I have wheat sales. Yeah, wheat sales were actually really good last week. I should have thrown a wheat chart in, Brian, but the wheat technicals look a little bit better to me.
I like the wheat technicals. We sold more wheat last week than we did soybeans on the export front. And to me, the May soft red, so that'd be the Chicago variety, has a what looks like a head and shoulder bottom that's been forming, and that looks like it measures up to about the 620 level, and you've got the 200-day moving average, which also caught the fall highs, is up in that vicinity. So I think with these export sales, if there's concerns about some wheat production, because wheat stocks aren't necessarily plentiful either on a world basis.
No. Okay, let's go to the drought monitor.
The majority of the Corn Belt was dry last week. Drought conditions were mostly unchanged, with the exception of drought expanding in western Missouri. Currently, about 29% of the region is experiencing some level of drought, down substantially from 75% 3 months ago, but up from 23% a year ago. The High Plains, they were also dry last week, with minimal to no changes in drought conditions. When we look at the percentage of U.S. areas experiencing drought, corn 42%, soybeans 35%, winter wheat 24%, spring wheat 45%, and cattle country 37%.
Got a little bit of rain for the eastern Corn Belt, we'll call it, in the forecast for the next 7 days. And then if you go out through the 16-day period, a little bit more widespread central and eastern Corn Belt. Still, the west is kind of dry. Brian, I know there's some La Nina concerns out there. As of January 2025, La Nina conditions have developed in the tropical Pacific Ocean. However, Forecasts indicate that La Nina is expected to be weak and short-lived, with the transition to neutral conditions anticipated by spring. Historically, La Nina events have been associated with hot and dry summers in the Midwest, but this one's going to fizzle out the way that it looks faster than maybe they normally would. So the forecasters seem to think that that's not a concern. Do you think it's a concern?
I don't know. I mean, with the La Nina stuff, the future things can change rather rapidly. It's all just physics models. And, if one little thing changes, then it changes everything else down the road. I think what the participants are looking at right now when it relates to drought is just how dry the conditions have been recently. So if you look at periods of December to January, the last month, I think there's parts of Iowa and maybe southwest Minnesota in that little pocket where out of the last 133 years, this is like the driest of all 133.
Yeah.
So something has to change as far as the pattern. And I understand if you're a producer in these areas, you're concerned about the potential of this dryness sticking around into the growing season.
Yeah, producers are concerned. The market clearly isn't concerned. And dryness, isn't necessarily the worst thing in the world if it's not overblown. It seems like we've had better crops in dry years than in wet years as of late. You can't have that dryness persist throughout the month of July in particular as it relates to corn. But a dry start and some dry weather in June apparently doesn't kill you,
No, I mean, I'm not an agronomist, but I've been around the industry long enough to know that, when you have very wet conditions, a lot of times the roots don't have to work very hard to get down to the water. So you get more shallow roots. When you have dry conditions during planting, those roots will dig a little bit deeper and it's more beneficial for the crop, during the remainder of the growing season. But again, that's just, I've never grown a single ear of corn in my life. So take that for what it's worth.
There was some guy who commented on YouTube like last week. He was like, that Brian Split doesn't look like a farm guy. He's like, he's too polished. He doesn't look like he farms dirt. I'm like, you're making a lot of assumptions here, bro.
Yeah, well, he's right. That was a good assumption. No, I've never farmed any dirt. I've
no, he thought you were a farmer, but he thought
I've been
you
in combat in the sandbox, so I've moved some dirt, in a different way. But
I think he assumed you were a farmer, but that you were like a rich farmer.
No, I am neither a farmer nor rich.
Yeah. Okay. Cattle were lower yesterday.
They sure were. Live cattle were 110 to 345 lower. Feeders saw losses ranging from 207 to 267, with the exception of the spot January contract that gained $1.35 that expired yesterday. Box beef was lower. Choice was down 306 at 327.48. Select was down 477 at 315.90.
Quick comment on the cattle technicals, Brian.
So there was a pretty big move yesterday, and I would say just a couple things to point out. 200 was like a barrier that we just really couldn't get through for a while. So I think we had some highs in the April contract of 199.70 twice, and then we finally got through it and haven't looked back. So 200 is a major psychological level. I do think if this cattle market's going to get squirrely, we've seen the market numerous times pull off the highs, but then it gets real when you start getting gaps. So if we start getting gaps lower, I'm going to be a little bit more concerned about the health of the cattle market.
All right, Brian McKenzie, I'm looking forward to seeing you guys in Nashville this weekend. We're all having dinner together at an undisclosed location tomorrow. And then Sunday, we've got the big agmarket.net meeting. Looking forward to it, Brian.
Yeah, likewise, Joe. Can't wait to see you guys in person, break some bread tomorrow together, and then put on a good show on Sunday.
Everybody have a good weekend. See you later.